The rules for real estate investing in Austin, Texas have changed, and if you don't keep up with this, you're going to get left behind. Stick around for this video and I'll tell you all about it. So for the purpose of this video, we're going to talk about two types of real estate investing strategies. The first one is to buy a property and wait for the market conditions to increase the value. This chart shows median home sale prices in the United States since 1965. With some short-term fluctuation, property values increase over time. There will be certain areas that appreciate faster, and this is usually driven by supply and demand. If there are a large number of people moving to a certain area, and the number of houses available doesn't increase at the same rate, there will be more people wanting to buy than there are houses available, and these market conditions will push home values higher. In most investing circles, this type of strategy is called buy and hold. The second type of strategy is to buy a property and then do something to it, to improve it, to increase the value. Your total budget for something like this will include the cost of acquiring the property plus the cost of doing the repairs or remodeling. The after repaired value, or ARV, should be high enough to justify the work that you're going to do. These types of projects usually last 6 to 18 months, so you're looking for an accelerated appreciation in a shorter time period. Now, this type of appreciation is not driven by supply and demand, but by the quality of the renovations you do as they compare to the renovations of the other houses in the same area. In most investing circles, this type of strategy is called fix and flip. Now, you may not think of it this way, but this same strategy also applies to new construction. If you bought an undeveloped parcel of land or an old house that you tear down and then build a new house, you would be making improvements that increase the value of that property. And as I said, the appreciation for fix and flip is different than the appreciation for buy and hold, but they do not exist independently. They are intertwined. An example would be is that if you bought a house that you're going to flip, during the time that you're doing the renovations, the supply and demand forces would still be at work. Let's say the yearly appreciation in the area is 5%, and you do renovations that increase the value by 20%. If it took a year to do those renovations, you could expect a total of 25% appreciation. One word of caution, though, is be very careful when you're projecting this appreciation. The appreciation will happen, and you certainly can build it into your budget. But remember, this tactic was at the core of some of the strategies that existed before the housing crash in 2008. Okay, so I know that for some of you, all of what I just said is very basic. But the reason I'm talking about it is that the changes that have already happened in Austin have, number one, increased the cost of actually acquiring properties, and number two, have increased the cost of actually doing the renovations and repairs. In other words, if you're going to invest in real estate in Austin, you're going to have to put more money at risk. And this scares a lot of people. Now, we know that home values in Austin have nearly doubled in the last 10 years, but this brings up questions such as, are homes overvalued? Is this the market peak? Is a market correction on the horizon? Or are we just in a growth period that nobody in this area has ever seen before? I would suggest that before you put any money into the Austin market, that you do your own independent analysis and determine which side of this debate you're on. I think we can all agree that the cost of acquiring properties in Austin have gone up. But some of you might dispute my statement about the cost of actually doing the repairs is higher. So let me explain. Any renovations you're going to do are going to move these houses into higher price points, and there's going to be an expectation for higher quality. As an example, if you bought a $150,000 house in LaGrange, went to Home Depot to buy all your materials and renovated the bathroom and the kitchen yourself, you might be able to get away with that. On the other hand, if you bought a $400,000 house in Austin and then expected to sell it after repairs for $700,000, that buyer is going to expect and will only pay for a higher quality of materials and craftsmanship. The good news is that home appreciation rates are some of the highest in the entire country. And there is a buyer pool ready, willing, and able to buy the more expensive houses. So why are more and more investors moving out of Austin and going north to Killeen and Waco or south to San Antonio to put their money into projects there? Well, the short answer is they're looking for lower acquisition costs. If you invested in a real estate project in either of those areas, you're going to have less money at risk, but those areas are going to have lower median price points, less buyer demand, and lower appreciation rates. It's kind of like saying, I don't want to buy Amazon stock because the cost per share is too high. One share of Exxon stock is a lot less than one share of Amazon stock. So if I bought Exxon, I'd have less money at risk, and if I was borrowing that money, I'd be paying less interest. But if you look at that return on investment, the same amount of effort produces nearly 3 times the return. Now this is really no different than going outside of Austin for investment projects because the cost of acquisition is lower. Take a look at these numbers. The cost per square foot is a way of estimating your return for the cost of construction. And of course, these values will vary in different neighborhoods across both metro areas. But if you built the exact same house in Austin that you built in San Antonio, cost to build it would be about the same, but what you could expect to sell it for would be substantially different. And yes, there likely will be differences in the cost of actually acquiring the land, but just like in that stock example, it will take more money to get started, it will require about the same amount of work, but your return on investment will be different. Well, I hope this is helpful. You know, I get text, emails, and phone calls almost every day from people who are thinking about buying real estate here in the Austin area, and I would love to help you out too. If you like my videos, subscribe to the channel and be sure to hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.